morning. Good time to get you. The market at all-time highs. We have seen a lot of retail money flowing into equity markets, something that you have been wanting for last decade now. But what next? Do you think this domestic liquidity will keep pouring in and keep supporting the markets even at higher levels?
My guess is that the domestic liquidity is today coming with fair amount of maturity and hope. If there is a similar kind of movement where markets continue to nudge upwards, my guess is that the SIP flows will continue, whereas the lump sum flows from high net worth individual investors might wait for a correction in the market to invest more into the equity market. So at higher level, we will see some amount of moderation in lump sum flows. But if there is a correction, then we will see increased flows because SIPs will continue and some of the HNI's money which is waiting on the sideline for correction will start getting invested into the market.
Okay. Good morning, Nilesh. Always good to have you with us. Let's talk some sectors. Bunch of the PSU Bank numbers have come and there seems to be a bet that things will shape up for them. Are you betting on them?
We are very selective in PSU Bank. One, the NPA issue continues to remain. The second thing which PNB results partly alluded is the under-provision of pension liability. The third and the fundamental issue with PSU Bank remains the administrative freedom to carry out their work. I mean, clearly they need flexibility which private banks enjoy in terms of carrying out their work. In private banks, a person in treasury remains lifelong in treasury and become experts in that. In PSU Bank, most probably in 3 years, people get transferred from rural department to treasury department and is expected to outperform market. I mean, those are difficult things. So we generally remain underweight PSU banking system till such time we see fundamental changes happening in the administrative side of the PSU banking.
Okay. Nilesh, hi, good morning. You've been tweeting a lot about the Trump trade and the way investors should look at it going ahead. This morning, we've woken up to some negative news on that front, some allegations of Trump sort of giving out data to Russia, confidential information to Russia, etc. Should Indian investors worry at all about things like this, or should we just carry on with our investments?
I think the more we see developed market behaving like emerging market, the gap between emerging market and developed market valuations will start coming down. We have seen in UK, volatile decision in terms of Brexit, shaking up the entire foundation of investors' faith in that economy. In US also today we are seeing fair amount of political allegations. So clearly investors are realizing that there's no point in giving premium to developed market for governance. There's no point in giving discount to emerging market for governance. And clearly today, India from a top-down point of view appears to be as solid as any other developed market and far more taller in many of the emerging markets.
Okay. Nilesh, what themes are you backing right now? We've seen so many domestic themes do well. The small cap index is up 100% in a 3-year period. And so many sectors have done well, so many stocks have done well, focused on domestic economy. What are you focusing on right now?
So, Anuj, as of today, obviously, finding value in the market has become extremely difficult. Unless until you are willing to catch a falling knife, there are hardly any values left in the market. And hence, we are trying to be far more focused on the bottom-up stock picking basis. One thing which we are seeing is the affordable housing related boom. Clearly government has excited consumers by lowering housing loan interest. A majority of housing loan providers are today willing to give housing loan at 8.35%, which is pretty low. The second thing is that the government has allowed 37 million Indian EPFO subscribers to take out 90% of their corpus for purchase of house. So there is a demand being created through lower interest rates and provision of equity. And we also see opportunity coming in terms of supply side reforms on the affordable housing. put both these things together, I think all sectors related to affordable housing is something which one can look, notwithstanding the current run-up in the price.
In fact, it's interesting you point out affordable housing, Nilesh, because we have the management of SOBA getting ready to address their numbers. So let me just cut across to that for a brief moment and then I'll come back to you.
Real estate transactions. Making GST applicable to under construction projects and formulation of rules under RERA are steps in this direction. Real estate continues to be governed very heavily by all the agencies, and post demonetization it had gone through with very difficult and challenging times. We as a company withstood all these adverse impacts, and we have declared our fourth quarter results as well as results for the whole year, which will reflect that there has been a top line and bottom line growth both for the year as well as for the quarter. Especially the quarter which has gone by has shown record collections and a beautiful improvement in our profitability.
Okay, that was SOBA Developers. By the way, the stock that's surging now, apart from Tata Steel, which has moved to high point, is United Spirits. It's really one of those stocks which over the last few days has seen a big bottoming out process and has moved on. Look at that intraday chart that you're seeing on United Spirits, now up 2.5% right now. Nilesh, a word on some of the FMCG names. Extremely high valuations, but we have seen Lever at all-time high, and a couple of other stocks have also moved up. Asian Paints has been strong. Godrej Consumer was strong. In this space, are you buying anything?
So in the FMCG sector, we are really become selective because there are two counter forces which are pushing FMCG sector. One, there is an onslaught from Patanjali on various products, and we have seen some of the FMCG company losing market share to Patanjali. The second thing is the GST launch, which is going to consolidate unorganized sector towards organized sector. Some of the listed large FMCG players will be beneficiary of this movement. So one will have to become very selective in picking up those stocks where you could see benefit of consolidation coming, say for example in paint sector, whereas on the consumer staple side one will have to be careful that you are not in the firing line of Patanjali.
Okay. Well, Nilesh, actually the reason why we dipped into SOBA Developers was also to ask you about real estate. When you spoke about affordable housing, you spoke about several themes. Is real estate one of them?
Real estate, clearly we are bullish post-budget when the government announced various soaps to push affordable housing. But the problem is that we find playing this theme via ancillary industries rather than the mainline industry. Bearing one or two names in the real estate sector, the debt burdens remains fairly high. RERA's introduction is going to reduce operating leverage for many of the real estate companies. Third, the governance issues on real estate sector continues to, betray the sector's valuation. So we prefer playing affordable housing thing via housing finance companies, via building materials company, via construction company, rather than real estate companies.
Okay, Nilesh, thank you for joining us. We've run out of time, but we will definitely chat in due course of time. Thanks for that.